All right, if you're serious about being a leader in finance, you've got to speak the new language of business. And today, we're decoding two huge parts of that language: the game changing sustainability standards, IFRS S1 and S2. Look, this isn't just about ticking a box, it's about understanding what truly drives company value. Let's get you ready for your exam.
Just think about this for a second. You see a news headline. There's a wildfire hundreds of miles away from a company's main supplier. Now, traditionally, you probably wouldn't see a peep about that in an annual report until it was way too late. But what if that fire messes up the supply chain? What if it stops production cold and puts major contracts at risk? See, that is exactly the kind of gap these new standards are designed to close. Okay, so here's our roadmap for today. First, we're going to talk about the problem, why we even need these new standards. Then we'll get into the tools themselves, IFRS, S1, and S2. After that, we'll hit the most critical part for your professional exams, building that bridge between climate and cash flow. And we'll wrap up with the key takeaways you absolutely need to nail to show those top-tier skills. You know, for decades, financial statements were the bedrock of business reporting, but they were missing a huge piece of the puzzle. We had these massive, value-destroying risks, things like climate change or resource shortages, and they were often totally invisible, just lurking off the balance sheet somewhere. And this, right here, is the fundamental mindset shift. This is not some separate, nice-to-have exercise. The core idea, and this links straight back to the IFRS conceptual framework, is that this stuff is crucial for investors to make decisions. Sustainability risks are business risks, plain and simple. They have real, measurable financial consequences. So how do we fix this problem? Well, the International Sustainability Standards Board gave us two really powerful new tools, IFRS S1 and IFRS S2. Seriously, you should think of these as your new best friends for strategic business reporting. Okay, so IFRS S1 is the big picture. It's the foundational framework, kind of the parent standard that sets the rules for all sustainability reporting. It basically forces a company to look across its entire operation and ask a simple question: what are all the sustainability risks and opportunities that could reasonably be expected to affect our money, our future cash flows? Now, if S1 is the whole framework, then S2 is the first really detailed application of it. It takes all those principles from S1 and zooms in on what is arguably the single biggest sustainability risk for most businesses today: climate change. And it gets very specific about what companies have to tell us about their climate-related risks and opportunities. Now, pay close attention, because this is your exam structure right here. The whole standard is built on these four pillars. When you're tackling a scenario in the exam, use these as a mental checklist. Are they talking about the board? Okay, that's governance. Have they stress tested their plans against climate change? Boom, that's strategy. This isn't just about memorizing facts. It's a framework for applying your skills. All right, this next part is where you really start to shine. This is how you take your answer from just a simple pass to showing real professional skill. See, it's not enough to just list what S2 says. You have to connect it back to the core financial statements. This is that higher-level synthesis thinking that really impresses the examiners. And this table just illustrates that link perfectly. Imagine you're in the computer-based exam. You've got one exhibit with the new S2 sustainability disclosures and another one with the draft financial statements. Your job is to connect them. So you read in the S2 disclosure that the government just brought in a carbon tax. Your brain should immediately jump to IS-37. Wait, do we now have onerous contracts? Or maybe you see a note about a factory getting damaged in a bad storm. That's a classic trigger for an impairment test under IS-36. You have to spell that link out in your answer. And that's the whole ballgame right there. You're acting like a professional advisor, showing the board how a climate event they talked about in the S2 report translates directly into a journal entry: an impairment loss, a provision, a change in an asset's useful life. This takes professional judgment, which is the absolute highest level skill you can demonstrate. So let's boil all of this down into a really clear strategy for your exam. This is how you apply all this knowledge when you're under pressure and really show the examiner what you've got. So here's the crucial point. Yeah, master the basics. S1 is the framework. S2 is the deep dive on climate. But winning in the exam comes from seeing those S2 disclosures as direct inputs, as triggers for the accounting you already know. When you're navigating those exam exhibits, don't just read them passively. Hunt for these connections. The critical skill they are looking for is your ability to apply your professional judgment to connect the story in the sustainability report to the numbers in the financial statements. And really,
This is what it all comes down to. As a future finance professional, you're going to be right at the center of this new world of reporting. Mastering this isn't just about passing one exam. It's about getting ready for a career where people will expect you to understand, measure, and communicate the full picture of a company's value. The real question is, are you ready to be that professional?